Hello and welcome to Currency Point, presented by me, Evan Lucas, for FP Markets. As always, please have a very good read through of the disclaimer on screen. Everything in this video is general in nature, none of it should be relied upon as any form of advice. FP Markets does not know your personal scenarios nor your personal financial goals, and therefore none of it should be relied upon as any form of advice at all. It is just general in nature only. Continuing on with our theme of looking around bond spreads, because it is clear that it is still the absolute driver inside FX flows, and particularly USD and also JPY. I'm going to concentrate on that pair. If you want to have any more updates about why it's moving things, have a look at my written piece, but I do really want to drill into this. And the reason for it is that the dollar-yen trade is an incredible mover and an absolute confirmation of the bond spread trade. I mean, JGBs to US 10 years are incredibly wide. Although they moderated last week, and not surprising, US inflation data was pretty sanguine. If you have a look also at the non-farm payrolls versus ADPs, it's all a little bit in between, but inflation expectations still remain quite elevated. Bonds remain quite sold off. Bears may be having a bit of a break, but in saying that, looking at dollar yen, it's gone from 103.90 to as high as 109.50. Now that was a 4.5 month high. It has eased when we saw that spread come back, but it is clear your ability to borrow in Japan and then go over to the States and buy is driving those Japanese hungry bond investors. They love it and they will continue to be so. So I am watching this trade quite closely. It's a pair that I always get a bit nervous about. Dollar yen is quite a strong mover. It can catch you out, but that spread is clearly moving that price quite neatly, which means, again, you can watch this quite closely, that if we all of a sudden start to see yields tighten up, you do start to see the scenario where they may fall from the US 10-year at the moment about 153, 154, maybe falls another 6-7 basis points like it did last week. Expect dollar yen to fall with it. It's almost in lockstep, and I think it's a very, very interesting trade to watch quite closely, because it's giving you an indicator, it's giving you momentum, it's also giving you a confirmation about what's going to happen. Again, similarly, opposite effect, if you start to see yields click up again, you'd expect the long position to really move and test that 109.3 mark further still. It's the trade that I'm watching the closest. It's the one I think that will actually be the most advantageous. But again, there's always caveats. Keep your stops close and watch that trade close.